How's the drink?
It's good.
It's apple juice and a bit of cherry liquor. But it looks like an old fashioned or a
It looks
Manhattan.
impressive.
Yes. Camera magic.
It's your condiments.
Yeah, well,
Yeah.
I'll change it up. I'll figure out some other stuff. So thanks, Dale. That's really fascinating. I want to pick up on the two essentially incentives pieces that you just outlined. You said implicit and explicit incentives. Implicit in the terms, like on the terminology effectively, around carbon neutrality, essentially a way to simply communicate voluntary action and essentially harness that as momentum. And then the explicit component around essentially the license to include carbon offsets in that pathway from folks such as SBTi. Where would you like to start? But I'd like to unpack both. So I'll give you
Sure.
your choice.
I think they're really sort of important, sort of fundamental
Yep.
questions. Ultimately, corporates want some kind of reward or recognition,
Yeah.
For their actions.
And this is voluntary action. Let's just stress that point. It's voluntary action. They should receive compliments for it.
Yeah.
Right? Because it's in the absence of a compliance incentive.
Yeah. No, and I think part of it to me is also, in some ways, as we think about the carbon market and the incentives to act, we're faced by almost different markets today operating sort of simultaneously.
I agree. So markets within a market.
Exactly. So on the one hand, we have the kind of the climate leaders we talked about, who are the first movers, often kind of the big tech companies and sort of other players who have really sort of been out in front,
Yep.
Working towards delivering kind of net zero commitments by 2030 or other sort of short-term time horizons, and they, I think, have a high propensity to kind of buy premium sort of removal credits, and they're very sort of concerned about the tight timelines to be able to deliver that.
Yes.
The short pathways and sort of other things.
And they're inherently difficult because they're at the vanguard of the technology cycle, essentially, right?
Yeah.
You're talking long-term permanence, you're talking direct air capture,
Exactly.
enhanced soil weathering, rock weathering, sorry, a bunch of other things, soil carbon, etc.
No, exactly. And we have, a small set of companies with a high propensity to pay, sort of all competing for that segment of the market as they look at that narrow trajectory over there.
Yeah.
But at the same time, we have, I think, a much bigger set of sort of, companies who are, industrial, who are on kind of longer sort of trajectories, who are really sort of trying to figure out the difficult path of significant investments to decarbonize their value chains, and then look at additional activities that fit on top of that.
Yeah.
Where the kind of think the concern today is much less around the source of supply, but the source of demand. Particularly given the uncertainty around the sort of incentives and how that sort of fits together, and the questions that raises around, what is demand going to be for the broader set of voluntary market sort of credits in 24 and 2025.
Yes.
And in some ways, we also have, I think, the broader sort of concerns around sort of quality and the degree to which there's almost, I think, a perverse incentive today to focus sort of investments on replanting forests that have already been cut down while doing nothing about stopping the deforestation.
Yeah, that's a completely perverse incentive.
Which is really a complete market failure.
It's a market failure, but it's also ludicrous. But again, it's a very small but vocal group of effectively ideologues that essentially driving that narrative. And you mentioned also taking control of the narrative once again to bring back logic to the equation. Yeah. I think that's what's been missing.
Exactly, and I think it's really important that we're able to kind of turn that sort of around.
Yeah.
Particularly because, again, reflecting back on Climate Week, one thing that was very sort of positive, despite the concerns about demand, was there's still a lot of interest in investing in the market.
Yes.
Particularly on the supply side in terms of high quality credits, people looking at making long-term investments, funds being raised, lots of other things, which gives one sort of hope about the overall sort of trajectory.
I think so too.
But I think the big risk is, if demand doesn't sort of rematerialize in 2024 and 2025, are we going to see companies and individual investors continue to sort of put money into new projects and other things?
Yeah, no, that's a real risk potentially. And then essentially there's also that lag. Effectively, when this investment comes into play, there's an implementation time horizon to actually get these to actually yield carbon credits, high quality ones, to provide that supply to the market. That timeline continues to expand. Essentially, the standards are under a lot of pressure to get it right, to demonstrate to the market that they have high integrity. But as a result, the throughput, the speed at which the supply actually gets through is slower and slower and slower on a regular basis. So now you have timing risk, effectively. This is what you're talking about, where investment dollars come in, but they actually take time to actually provide a return to those investors. And if, like you're saying, if the timing isn't ideal and the market's still in a bottom swing, that's not great for encouraging more investment on the long-term pathway.
Yeah.
That's worrying.
No, it sets up, I think, a real crisis for the market.
It's a negative feedback loop.
Yeah.
But conversely, on the other side, I'm an eternal optimist. I'm a rational optimist. I like to sort of qualify myself as that. A little bit biased, but anyway, hear me out. I do think that broader macro and the integrity issues here do get resolved over time. I just think that this is a natural evolution of a market that's seeking a North Star, essentially. Integrity is key. People are working on that. I think there are really robust systems in place and people working on making that reality. I think you outlined something really important, which is that the demand side is trying to find out exactly where they are. Okay, you have the Microsofts of the world effectively looking at the CDR side, the carbon dioxide removals piece of the equation. But you've got a lot of these other heavy emitters in the middle side of that distribution curve. They have a very difficult pathway to get to net zero. And that trajectory gets steeper and steeper and steeper over time as they kind of keep pushing the time horizon. So I think that there's actually more demand that's actually underlying in the market that comes in. So let me just take the opposite side of the argument. What happens if a significant demand quotient is actually unlocked? There's essentially, the market gaps up effectively. More demand comes in, you still have anemic supply, and that's effectively a shock to the system. The market prices start to inflect and move upwards. That's a dislocating.
No, I think that's that's definitely a real possibility. And listen, despite some of the challenges we talked about, I'm equally sort of optimistic and really sort of a believer in, the importance and the power of these markets.
Yeah.
I would sort of reflect on lots of kind of the one-to-one sort of discussions we've had with our clients and sort of other companies, through this project over the last 12 months. Lots and lots of companies want to do more. And I think they want to do a lot more. They can see that they want to sort of, drive and put forward sort of multiple sort of outcomes, not just around carbon, but looking at sort of nature positive things that they want to do around their plants and their operations. They're looking for a pathway and sort of, I think, guardrails to be able to sort of do this.
Yes.
But they need, at the same time, to be able to kind of tap into that incentives, which shows that they're going to get kind of recognition and credit, both to make sure that people don't say they're doing the wrong thing, but also get rewarded for what they're doing.
Okay.
So somehow we need to sort of close the loop, between those things, and ultimately, probably sort of collectively sort of work to, work with, people like sort of SBTi and sort of others to help sort of define, what is the pathway and how might we be able to keep that sort of pressure on net zero while sort of opening up sort of other opportunities for these kinds of beyond value chain sort of investments and the like.
Yeah, whilst not replacing or moving away from the tradition of the mitigation hierarchy. There still needs to be internal reductions, and offsets are a key component to actually help to price that and ultimately drive that incentive. So let's talk about that explicit incentive for a second. The SBTi side of things, that's essentially the elephant in the room. By omission, over the last year or two, SBTi has essentially advocated for no inclusion of carbon instruments in that hierarchy, in that transition pathway. But they, in Climate Week, just recently published a call to action, essentially here for the market, to say, hey, prove it to us that these instruments, whether it's RECs or offsets, warrant an inclusion in that hierarchy. Can I ask you to comment on that?
No, I think that's great. I mean, it finally, after kind of years of waiting and sort of pushing, at least sort of begins to sort of open a door in a pathway that may offer some latitude to be able to do that. And to their sort of credit, they've been, very sort of upfront about the fact that, we're prepared to sort of consider sort of alternatives, but show us the evidence, show us the proof that companies would do more faster and better, while still continuing to sort of decarbonize, commit to sort of targets to sort of bring things sort of forward if we're able to do this. Because I think they rightly want to make sure that they don't sort of put in jeopardy the infrastructure that's sort of built around, net zero and SBTi today, while, opening up the latitude for more companies to come in and do more and the like.
Yeah, I think what I would commend them, and I had a conversation with Swati Manlow from WWF just recently, and we talked about this component. Give credit to SBTi in terms of the rate at which they've achieved effectively onboarding of thousands of corporates globally to actually make these commitments that are science-based. So that's the first thing, because as a practitioner in this market for almost 2 decades, we've been doing that, but very, very slow and inefficiently on a one-to-one basis. They've effectively created the kind of the hierarchy and the framework effectively to incentivize corporates to now make these pledges, and they're aligned with science. So that's fantastic. And now it's the next bit. How do we actually harness not only the commitment, but actually the tools to empower that action? Because my belief as a rational sort of economic actor here is that without a pricing of that externality, these are just commitments, but there's no penalty for missing them. And effectively, we cannot take the foot off the gas right now. We don't have the time. We don't have that luxury. Yeah. So also the other hope is that the market itself and all the different proponents therein actually heed this opportunity and respond to the SBTi call.
Yeah. Yeah. No, I mean, there's no question, right?
Yeah.
Economic incentives drive behavior, especially with sort of corporates and boards and sort of other
Absolutely.
things. And I think equally on the other side, as we also look at, what's happening with, carbon markets and the ability to sort of channel sort of carbon finance there. For instance, if we look at kind of where we sort of sit today, sort of Indonesia, sort of other sort of, countries in the region, there's just such a gross, disconnect between the potential, value economically of a land for palm or for, sort of forestry and sort of timber versus carbon.
Yes.
And that's why I think it's also sort of, critically important to be able to connect those markets to allow kind of export and those prices to sort of flow through, to give landowners a different sort of economic incentive to say, we shouldn't necessarily just go one route and sort of, cut down the forest to sort of create sort of further land for palm or sort of other things.
Yeah.
But really should actively sort of think about opportunities around kind of carbon and other things too.
And that's really important because that's essentially the transition in action, right? We talk about energy transition, that's visible in terms of moving from one source of energy to others over time. But in this case, we're saying, hey, there needs to be incentives to drive behavioral change to shift away from destructive practices to constructive ones, effectively protecting the native ecosystems from a biodiversity perspective, but from a carbon perspective. Let's put a value on that and drive that change. And then, like you said, essentially in the carbon sinks or around the equatorial belt, you have economies that can greatly benefit from effectively tapping into a new asset class. They can view it as a commodity or an asset class, but effectively being able to commercialize that and drive revenue to their economies and provide opportunities for employment and scaling up those communities, those systems, those services sectors, the trading hubs, etc.
And that story is, what we're doing a poor job of really communicating the way that we need to sort of today. And that's probably where, a much more sort of proactive effort is needed to look at, where's the middle ground between some of the people who are shooting at the market and the clear benefits of, what this can achieve when it's done well.
Yeah.
Obviously, everything is not going to be perfect.
No, it never is.
But if we're not able to sort of open up these channels and sort of take it forward, no capital is going to flow. And that puts us 3 steps backwards.
Completely. And we just don't have the time to waste effectively.
Yeah.
Great.
Yeah.
I like that. Cheers.
Cheers.